You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That rockin' tune means it's time once again for Volatility Views, the premier program for volatility traders. And my name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to choose from. Many, many. Some may say 15, in fact, on the old network. And where is the easiest place to find all that great content? Well, the mothership, the flagship, theoptionsinsider.com. While you're there, of course, make sure to check out all the archives of Volatility Views, maybe the option blog, maybe the advisor's option if you're in the asset management, money management side of the space. Maybe you're more on the beginner retail side, Options Bootcamp. Maybe a fun one for you. If you want it all, the easiest place, just go to iTunes or Stitcher or wherever you get your podcasts and just grab our Options Insider Radio Network show, our feed there, and that gets you everything. All 15 programs. That includes daily news. That's pretty much the whole kit and caboodle. So if you want some serious options content, we got you covered over there on the network side. And, of course, you can always grab us via the app as well, iOS, Android, and the beloved Fire OS. And however you listen, including those of you who can join us live, yes, we're back live today, noon Central. We are recording and streaming it live here at Volatility Views, noon Central, on Friday, December 23rd. So we're heading into the holiday weekend. And for all of you who can join us live via Mixlr, MIXLR, to surf on over there. Search for us, search for Options Insider, search for Options, you'll find us. And you can join us live. I apologize for not being live all last week and earlier this week, but I was traveling. I got to get the heck out of Dodge, out of this polar vortex. Now we're back. We escaped the polar vortex, and all is right with the world. And joining me on the old program today, I believe we are meatball-less, but doesn't matter. We can still hang with the best of them because we are joined by Mr. Corner Officer and soon to be Dr. VIX once he gets all of his papers in order. Mr. Russell Rhodes, the senior instructor, indeed the director of education over there at the CBOE Options Institute. Mr. Rhodes, welcome back to the program, sir. And how did you survive the polar vortex here?
I went to Memphis.
Oh, that'll do it.
No, I had to drive. I flew down and picked my father up and drove him back. I'm back in the polar vortex just like you. I am in the Corner Office West out in Hinsdale, the birthplace of Mark Sebastian, by the way. That's what it says on the little sign. It says,
and the angry crowds.
It says population 29,412 and birthplace of Mark Sebastian, and also, gosh darn it, who was the Morris the cat? Those are the two famous people from Hinsdale.
It's amazing the angry crowds with mobs and pitchforks and torches haven't come and burned that town to the ground yet. But yep. I'm sure it's only a matter of time, sir.
Finicky trader and a finicky cat.
There we go. All right. And with the team assembled, we're going to dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is the portion of the program where we break down what was going on the week that was, and indeed still is, from a volatility trading and analysis and trending perspective. And like I said, we are streaming this live and recording it on Friday, December 23rd, right around noon Central here, so right around the middle of shall we say, a quiet trading session. Not exactly surprising. People have to get the heck out of Dodge here heading into the long holiday weekend, and they seem to be doing just that. Most of the major indices on the day are pretty much unched or pretty close to it. Not a heck of a big lot lighting it up out there from an underlying perspective. A little bit of red on the screen, but not a heck of a lot to really comment. S&P off a fraction of a point as we speak. So pretty quiet day, and the VIX Cash trending up a little bit going into this long holiday weekend, which is a little bit interesting given the fact that people tend to like to divest of all of their long premium holdings going into these holiday periods, lest they suffer the temerity of paying decay, which we all know they don't like to do. But in spite of that, VIX Cash popping up a wee bit today, up about nearly 0.2 of a point to about 1161. So well south, well shy of that magical, mystical 12 handle. So all the people out there who were saying, well, you know, post-election, now we got this Trump rally and Vol's getting crushed. We had a little bit of a spark of life there with the Fed. Maybe the Fed would be the savior of all things volatility. Maybe the Fed would give us a little bit of life back to this marketplace. Well, the Fed has come and gone. The Trump rally, it still exists, so that hasn't really come and gone yet. It still seems to be rolling, even though taking a bit of a break today. But that said, there have not been a lot of drivers for volatility recently, so we'll pay attention to that a little bit in the crystal ball. Before we get to that, Mr. I almost called you greasy meatball. I would never do you that slander, sir. Mr. Corner Office, what was catching your eye this week from a volatility trading and trending perspective?
Well, you know, needless to say, I always think we're going to have higher volatility, and eventually I'll be right. But the thing that I was, and I was watching volatility part-time because CBOE has kicked me out until 2017 because I accumulated way too many days off. And for some reason, they want to make sure I use them. But I really did expect, you know, we do and I'm not trying to jump to the end of the program and kill the crystal ball here, but you know, I'm always on the high end relative to you guys, but I felt like I had a really good reason, not just because I love high VIX. And I really did feel like as the January 27th options become more of the calculation in VIX, we went from it being the January 13th and January 20th to January 20th and January 27th this week. And using my live vol platform, shameless plug, right now the at the money January 20th SPX options have an implied vol of 946. And then if you skip ahead a week, the implied, in fact, the first at the money weekly SPX expirations that have an implied vol of over 10 are the Friday options after we get our new president. So I really do think that you're going to get a little bit of a floor in VIX because there are market participants bracing for the unknown unknowns to become knowns after January 20th. So that's what kind of surprised me, that I'm looking at a handle on VIX that is not only under 12 but well under 12 right now. I really expected a 1 and a 2 at minimum, a 1 and a curvy number, and not a 0 as a curvy number at minimum. So that was kind of the main thing that kind of caught my eye. There's some weekly stuff, but I'll wait till we play the fun music before I talk about that.
Yeah, I'm not there yet. Since you did flirt with the crystal ball, I gotta say once again, not looking too bad for me going into the start of the show here. I think I predicted an 11.75, and as of showtime right now, commencing the show, we are at 11.62. So I'm closing in on another point for point win. That said, this show is wild and unpredictable. Maybe yet another Hillary investigation will launch mid-show. Who knows? Might have a little bit less resonance than last time. But still, you never know what could happen by the end of the show. But closing in, Mr. Rhodes, on I think, fair to say, another victory. But again, we got an hour. We'll never know. We'll never know what will happen between now and then. But you're right, VIX Cash still shy of that mythical 12 handle, which is, I know, a point a lot of people like to look at. People like to look at psychological levels and a variety of different things in the broad S&P and the major indices, and skew, and of course in the VIX itself. And 12 seems to be a pretty important psychological level, just because it has that resonance to it. And south of 12, it just seems like a very, very cheap vol. I'm kind of with you again there. I'm not sure if I'm with you on the buying all the vol part, but I kind of have to feel that there does have to be a floor going forward somewhere. Again, I'm not going to preface the crystal ball too much. Also, this time last year, we were saying remarkably similar stuff, and it turned out that China and the Fed and everyone else kind of combined to have a very different view of the market and a view of volatility, because we kicked out of the gate, just shot out like a cannon, and vol took off, and we all know how the start of the year went. So this time last year, we were saying similar stuff. Wither the vol. Where can we find some vol? There's no earnings, haven't done anything. The Fed didn't really do much. We obviously didn't have an election on the burner last year, so that didn't help. So there really didn't seem like anything from early to mid Q1 that would inject any vol, and lo and behold, the unknown of unknowns came rearing its ugly head and gave us a sucker punch to start the year off. So who knows? We could kick the year off again that way. I'm not saying I'm predicting that, but that said, we have to check ourselves sometimes this time of year. Looking out at the futures, which, as we said before on the show, is the answer to many, if not all, questions out there in the realm of volatility and the VIX futures term structure. Of course, DEES has gone away. We are looking at Jan out there as the front month future now, and we're seeing that still fairly hefty premium out there. The cash, like I said, right around 11.5, 1160 or so, and the front month Jan out there right around 1440. So you're talking about 2.5 point right around that level premium there, which is fairly substantial. It's kind of been where it has been. It's where it has been for quite some time, though. At least the last few shows we've been talking about that. So it seems kind of locked in that range, which is fairly interesting. I would have thought we'd have seen a little bit of fluidity, a little bit of maybe evolution of that over time. But so far, at least on the Jan cycle, we have not seen that. Has that surprised you at all, Russell? Is that kind of what you expected? That kind of, I don't want to call it rigidity, but the stubbornness of the Jan future to come to grips with the cash in any way, shape, or form.
Well, again, I think maybe what happened to begin last year, as you just mentioned, is kind of stuck in people's minds. We are so long in I don't even know what long in the tooth means, but we are so long in the tooth with this bull run that we've had that you got to figure 2017 is going to be a very difficult year for stocks to put up another large gain. And I would have said that if the end of the year was on October 31st, not even taking into account the big run that we have had to end this year, you've got to figure that is having some influence on the January futures. At least in part. The funny thing is the January futures expire just before we get President Trump. So the February futures, which I think I just saw at 16, that's a pretty stiff premium as well. And you got to assume that they're going to stick in there like that. One other thing, and I mentioned to you just before we started, I put a couple of charts up. I got to playing around with numbers because they won't let me come to work, and I don't know what to do with myself with all this free time. Although I've got a really long honeydew list here. I took a look at what VIX does on average between the day before Christmas and the first day of the year, and I tweeted a chart out of it. And then I took a look at, on average, what the January VIX futures do between the last day, or the day before Christmas, and the last day of the year. And the really funny thing is, spot VIX on average has actually gone up. If you average the price activity from 2005 to 2015, and the futures have actually crept lower on average. So, we still got a week to go in the year. Don't be surprised if we see, if nothing dramatic happens in the next week, if we don't see a little bit of a crush of the futures relative to spot VIX.
Yeah, I think we have some listener mail touching on that point in a little bit as well. So we'll table some of that. But you're right, it is funny. That is if you're kind of wondering what the home life of soon to be Dr. VIX is. When he's not working, he's home just cranking away on his VIX weekly charts and his seasonality of VIX graphs. So there you go. Perhaps a little bit disturbing glimpse into Mr. Russell's home life. And with that, since we're talking Mr. Russell, let's get him on for his actual segment here. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, soon to be Dr. VIX, a.k.a. Mr. Corner Office, a.k.a. the Director of Education over there at the CBOE Options Institute. We were talking before the show. You said a lot was catching your eye out there in all things VIX weekly options. So let's get right to it with your weekly rundown, sir. What's catching your eye?
Well, last week I talked about the DEACE 28 expiration, and we had somebody that came in and sold an awful lot of the DEACE 28 14 calls a couple of weeks ago. They took in, gosh, I want to say, where's that price? I can't read my writing. I like 25, 30 cents for those. Those things are now offered down at a dime. So somebody was pretty smart with respect to, and they did this when we got one of our more recent small bounces in volatility. So somebody did a really good job of taking a short position in VIX. Going into next year, the January 4th options have picked up in a very big way. And there were a couple of, I'd start to say strikes, but one of them is a put and one of them is a call. The 1150 puts this last week, it's like somebody cannot get enough of selling those things. Yesterday, somebody sold about 6,000 of them for 10 cents. And on Wednesday, somebody took in a dime for over 10,000 of those. And so now they've got, the open interest is a little bit over 17,000. About 16,000 of that appears to be one guy or a girl coming in over the last couple of days with a really risky assumption that we will not have VIX settlement next Wednesday below 1150. That's going to be an interesting price to watch, especially if Tuesday night next week VIX and the December 28th futures go out, somewhere between 11.5 and 12. Somebody's going to be sweating it, maybe relative to their bonus. On the other side of things, somebody the last couple of days in that 17,000 open interest for those 1150 puts, that's the biggest open interest I think I've seen in a weekly VIX option in some time. It's, I think, because of the holiday season, the activity has tapered off a little bit. On the other side of things, on the call side and on more of a bullish expectation, the last couple of days, somebody has been buying the January 4th 16 calls, and they have been paying between 25 cents and 30 cents for those. So it will be, somebody's looking for maybe a volatility spike in early 2017. And I realize as I'm going here that I misspoke a little bit when I said that that those puts that were sold were looking at the December 28th expiration. They're actually the January 4th expiration. So it'll be interesting to see if VIX and the January 4th futures go out the night before settlement, below 12, and if they'll be sweating that 11.5 price level or not. So some interesting things actually starting to go on in the in the VIX Futures contract, or in the weekly VIX Futures contracts. And since I did my look through, it looks like somebody came in and is doing some trading in the January 4th, I think 18 calls here, and I'm trying to fumble along and see if I can figure out what's going on with those options today as well. I'm not being able to place exactly what trade's going on in those, but I thought I just saw some volume there. Anything you see in the?
I see the Jan 16s going up today. It's kind of an anemic day for volume. It's about where we're at, just barely crossing the 100,000 contract threshold right now. About 12, close to 12:30, 12:20 or so Central. Usually at this point in the day, we put up many more contracts again, kind of reflecting that seasonal slowdown that we see in the marketplace. By the way, all these Jan 16 calls, when you said someone could be buying them, could they perhaps be for the Dr. VIX corporate account, sir? And I know you're a big fan of all things volatility.
I work for the exchange, and I'm not allowed.
I'm teasing. I'm joking.
I know.
Of course. I like to get you in trouble.
I'm providing clarity for job security when I say that.
I'm joking. We all know 4,000. That's way below your size threshold anyway. So not indeed a trade for you. But you have been buying VIX every week on this program. So maybe someone is been listening to you and deciding to load up. Either way, you're right. The 16s, a couple interesting thresholds there. The 16s coming up in a few weeks, as well as the 11.5 puts. Let's get into what we're seeing out there in the big mothership VIX options. A lot of it kind of correlating to what we're seeing in the weeklies. And it was, coming into today, it was a fairly active week, especially given kind of the light volume we've seen otherwise around things of late. VIX ADV has been tapering off for the latter portion of the year. Usually it's around 600,000 contracts. These days it's down to about 550. Again, reflecting, the election notwithstanding, it has been a bit of a quieter period in terms of VIX options. And today, certainly not lighting it up. Like I said, just crossed the 100,000 contract threshold as Russell was talking. So not a lot lighting it up. Only a few more hours to go in the day today. But this week we had some decent days, including multiple days over that ADV to the tune of 600,000, 750,000, 730,000. So some fairly almost 800,000 there coming in on the old 19th. So there were some flurries of volume, and of course tapering off as everyone heads to the hills or for their holiday vacations later on in the week. Did see a few, despite that somewhat decent volume, we saw a few interesting trades of note. Russell early outlined what we saw in the weeklies. We did see some interesting stuff out there. We saw, including one of the sizable trades on Thursday, was about 80,000 contracts going up in this Jan-Feb diagonal. Maybe call it a roll, call it what you will. It was a Jan expiring on the 18th, 22 calls. Paper buying those, selling the Feb 30 calls expiring there on the 15th, doing it 40,000 times, so 40 and 40, 80,000 contracts being the largest trade by far on that day. Not the largest of the week, though, because we had a three-way going up a little bit before that. It looks like a Jan vertical financed perhaps by some puts. The Jan 14, pretty wide vertical. The Jan 14 half, 25 going up 37,758 times, perhaps financed by the 13 half puts. I got to dig into this one a little bit more to see. Those puts went up a little bit high on the threshold there, though. So perhaps they were buying that one. But either way, that one also 37,758 on the puts as well. So a lot of size. Those two trades combining for the lion's share of the volume that day. Funky stuff. Going down a little bit earlier in the week, down to Wednesday. Also another vertical versus puts. This time a little bit farther out. We were talking weeklies earlier. This time we're talking March, all the way out to the March 15, 17 vertical. Again, a little bit more reasonable vertical. That's the type of vertical we tend to see a lot more about here in VIX land, as opposed to 14 half, 25, 10-point verticals, not so much in VIX land. At a certain point, that selling that upside strike 10 handles out doesn't really make a lot of sense. But 15, 17 going up here, paper buying in March, the March 22nd contract here, 30,000 times versus financed by the March 15 puts. So someone perhaps come into the Russell school of thought there, saying, hey, I like myself a little bit of vol here going out to March, and as long as it's above the 15 strike, I'm happy camper. So someone drawing a pretty aggressive line in the sand there to the tune of 15,000 contracts in March on the old vertical there. So interesting stuff. Actually, a bit of a combo if you see it that way because they're both on the 15 strike. So a lot of interesting stuff. I shouldn't say a lot. Some interesting stuff lighting it up earlier in the week before VIX activity somewhat predictably kind of tapered off here going into today. In terms of the hot strikes, what was lighting it up or what is lighting it up right now? Again, we had a lot of open interest coming off here. So we have a bunch of new strikes on the board. Dece going the way of the dodo. And so it's all pretty much all jam with the exception, excuse me, of one Feb contract out there. So let's kick it off with Jan 23s, 191,000. Again, that's pretty light for the top of our top 10 list, but it's that time of year. It's that time of the list while the open interest rotates out. And we got a fresh crop on the old list. So 191,000 of the Jan 23s to kick it off, followed by 165,000 of the Jan 21s. Let's do a nice call strip of Jan here. The little more reasonable Jan 20s, 161,000 for the number 3 spot. Jan 22s following pretty close. 157,000 contracts coming in at number 4. Then it's always, Russell, maybe you should do a paper on this. What is the magnetism? What is the attraction of that 30 strike? Because I can probably count on one hand throughout the entire year we've been doing this show when there hasn't been a 30 strike somewhere in this list, regardless of where the futures were, regardless of where the cash was. The 30 strike is just ever present, and it's here again twice. The Feb 30s coming in at number 5 with about 150,000 contracts open, followed hot on their heels by number 6, the Jan 30s with about 149,000 contracts open. Then the far more realistic Jan 17s at number 7, and then the Jan 25s, 111,000 open to those at 111 of the Jan 25s for the number 8 spot. Number 9, the only Feb on the list, the Feb 23s, 110,000 contracts, and then winding up the top 10 this week, the Jan 29s with 110,000 contracts open. Total of about 4.8 million contracts open, about 3.5 or so on the calls, and about 1.3 or so on the puts. Mr. Rhodes, I know this hot strike list always tickles your fancy, so if you have any thoughts on that, have at it. And also, what are your thoughts on perhaps the allure of that 30 strike? Why does it refuse to die?
Wow, you teed it up with exactly what I wanted to talk about. Well, first off, you're the keeper of the hot strike list and the main commenter on the hot strike list, but I look at it every week and I can't recall the last time there were no puts on it.
I was going to comment on that as well. It's been a while since okay. We've been. Usually there aren't that many puts. Maybe there's 1 or 2. The last month or 2, it's been 4 or 5. Sometimes half of the list has been puts. So puts have been kind of the order of the day. And you're right. This time I was kind of noticing that myself as well. That puts seemingly dropping off in spite of the fact that people were blasting out those 11 halves. Not enough to make the list this week, sir.
And then the other thing is it's the round numbers and open interest. It's not just VIX, and so while you were talking about it, I just pulled up a quote screen of IBM, which is a huge deviation from what this program is about. But IBM, and looking at the standard January options, and I am going to make a point about this, looking at the standard January options, January 20th, IBM's at 166. The open interest on the 165 calls is 10,300. The open interest on the 170 calls is 15,800. There's a strike between them. The 167.50s, 188 contracts. But it's been I think it's always been like that, where these round numbers tend to attract a lot of open interest, and it's the same thing if you take a look at the puts. So I have a very strong feeling that if I were to do a paper on the higher open interest around these round numbers, you would find that it's not just VIX. Now that 30 number, I always felt like it's just a level that we hadn't gotten over. I used to think this. We've spiked above it once in the last couple of years, but my feeling was always that maybe some volatility players that got long exposure weren't really afraid of selling those 130 calls over and over and over again with the with the thought that they're never going to be in the money. I do know that there were people in the pit that were more than happy to sell the 130 calls anytime. The 30 strike calls. Anytime people wanted to buy them, and those guys aren't down there anymore after what happened in August of 2015. So I think there might be a combination of that 30 strike being a round number, but also that 30 strike just being you referred to the 12 as kind of a psychological number. I think that 30 is a psychological number as well, and it's kind of in people's minds as a level that we will not get over. So
I think there's some actuarial research lurking out there in some large insurance house that the 30 strike is where maybe the cheapest place to get their catastrophe insurance. Maybe it's where they determine the most effective place to be. Whatever it is, someone out there just refuses to let that 30 strike die. I'm not saying it's the top of our top 10 list every week, but it's always in the conversation somewhere.
It's always there, and it's almost always the next two standard expirations as well, like we've got right now. And most people look at January, are always looking at the front month. Again, with the inauguration coming between January and February, that might contribute a little bit more to the February contracts. But it always seems like there's always the 30 call in the top open interest, even if VIX is at 11 like it is now. It's I guess there is something that I've got to go do academically now.
There you go, sir. You didn't have enough papers on your plate, so we thought we'd give you one or two more too. Well, you said you're not working right now, so there you go. You got all the time on your hands to sit down and crank away some research. But yeah, someone out there, if not Mr. Rhodes, someone out there needs to just determine what is the allure? Because you're right. There are these round numbers, and I certainly ascribe to that theory as well. People love paper liquidity, loves to aggregate around these round number strikes. But it seems like the 30s just belie any other sense of context. The VIX Cash could be threatening single digits. The futures could be, look where we are now. VIX Cash right around 11.5. Excuse me. The VIX Futures, 14.5 or so. The 30 strike seems like a pretty far out of contention strike. Yet here it is in our top 10 for open interest again this week, twice, which is just it's just a fascinating, the undying, unkillable 30s maybe is a good theme for the future. Maybe perhaps a good theme for a program. Switching gears a little bit here because we have been talking crude. Crude does fascinate us. By the way, TWIFO coming up hot on the heels of this program, listeners. So if you want to get into all things commodity volatility, stay tuned for that in a little bit. We're doing that a little bit earlier today, I think around 1:30 Central Time as opposed to its normal 3 o'clock Central Time. So making it a little earlier, making it a little easier for you guys who are heading out early for the holiday. So stay tuned for all things TWIFO coming at you a little bit after this program concludes. And we are doing it live via Mixlr because all you guys missed the live stream last week and you hit us up. Where's the live stream? All the pain and the anguish. So we decided to spare you that this week and get you some more live goodness. But looking at what's going on, a big picture here in all things crude vol. Russell, we've been talking on this program it seemed like there was a nice floor out there for a while in all things crude vol. And depending how you looked on this, for the purpose of this program, we like to look at OIV and OVX. Those are, of course, the two CBOE VIXs of crude. One, of course, coming off the big WTI options. One, of course, stemming from the USO options, the widely traded ETF on crude. And it seemed like there was a nice floor somewhere, in that 35 to 37 range, 38 range or so for both of those, OIV and OVX. And it seemed like there would take a lot to really break through that to the downside. It probably would require a protracted rally out there in crude and WTI because that's where the cheaper call premium was, the cheaper volatility premium was to be found. It was in the call wing, and lo and behold, we did see a bit of a protracted rally out there in crude. And of course, coming towards the end of the year, a lot of the other drivers of crude kind of tapering off. We have seen crude vol and OIV and OVX blow through not just 37, not just 35, not even just 32, but blowing through the 30 strike. Coming in this week now, finishing up the week right a little bit shy of 30 yet, about 29.89 or so out there, getting as low as I think 28.39 yesterday. Actually 28.15. Actually no, excuse me. Earlier this week it was even lower. It was 27.33 out there in OVX and similar levels for OIV. So all the people out there, myself included, I'll put myself in that camp, who thought there would be some floor around that mid-30 level. We might see a little bit of a rebound, not the the much ballyhooed aggressive mean reversion. We all know it doesn't happen that fast, but maybe a little bit of a sell-off in WTI would drive some of that vol back up, or something else would happen to drive that. But we have not seen that. So interesting times. Has the lack of resilience of crude volatility surprised you? We were just talking earlier about perhaps the 12 handle on VIX Cash being a bit of a psychological floor, or perceived one for VIX. And when it gets above it or below that, people start to get interested or panicked, depending on which side of the fence they fall on. Do you think 35 was a similar level for OIV? And has it surprised you that it really had just blown through those to the downside? It doesn't seem like it has any hope of, or any inkling of, going back anytime soon.
We got just about every uncertainty, or at least near-term uncertainty, with respect to the price of oil behind us. They had an OPEC meeting. They seem to do some things that will keep oil in the in the 50 range or so, which is and I say because I just got a huge virus notification on my computer. If I disappear, I apologize. But it seems like that any potential movement for oil, or anything that might make oil spike an awful lot or drop an awful lot, there's nothing on the next couple of month horizon. Also, crude oil volatility has been in the teens. It is not unheard of. So dropping below 30 is not, and it's been a while since we've been below there, but dropping below 30, I'm not overly surprised that we've got OIV and OVX in the 20 range now.
Yeah, that's true. 52-week levels is certainly, that was a nice floor for the better part of the year. But you're right, going longer term back, both products have dipped lower. It's just so many people got caught up in the fury and the furor that was crude oil vol this year. It's been kind of a fun story to watch. That it does seem like, at least for the better part of this year, it had maintained that mid-30 level. But to end the year, nope, it's going to break through to the downside and continue to surprise all of us, I'm sure, as we go forward into 2018. Meanwhile, it's time for Russell and I to go forward heedlessly, bravely, some may say foolishly, into your questions, because it's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail. Like the man said, this is the portion of the show where we dive heedlessly into your crazy questions. Last week, before we kick on that really quickly here, Russell, last week we asked you guys an interesting, very surprising poll about, we ask a question of the week, of course, every week on the network. And we asked you last week, what do you think financial advisors, what level of options knowledge do you expect from your financial advisor? And we were surprised that the vast majority of you, or not vast majority, but the largest percentage of you chose a none. I'll do it myself for about, I think, 43%, followed number two by about 30-odd% with the options specialist. And then buying puts and calls and understanding income and volatility were kind of tied for third, and a distant third at that. So granted, we speak to a little bit of the choir here on the old network, people who are down the options rabbit hole. But I kind of thought maybe level 3 would do a little bit better, but interesting stuff nonetheless. This week, Mr. Rhodes, our question of the week, and I'd be curious to get your thoughts on it. It still has a few more days left, so if you haven't had a chance to vote yet, get out there, make your voice heard at Options on Twitter. And let's see, our question of the week this week is major market indices pushing record highs. Everyone's got protection on the brain. We know when we see your questions out there to us that a lot of you guys have the protection on the brain. So we asked you, how do you guys protect your portfolio? These results also somewhat surprising Mr. Rhodes. And I'll give you the 4 choices we gave them. We said just move to cash or bonds. We said, so buy a protective add the money or out of the money put, buy a put spread or a ratio put spread. We did some combining there to give everyone some choices. And then the 4th choice was a collar or a collar with a kicker for the savvier out there of our listeners. Mr. Rhodes, if you want to weigh in on your thoughts in terms of what your favorite would be, by all means. And then, of course, what do you think is winning our poll? Then I'll give you the actual answer.
Oh, no. I haven't cheated. Personally, I like to get short. But I think if you've reached a point where you're pretty happy with your recent returns and you think we've got limited upside, especially among the audience that we are speaking in front of right now, I would think they step up and they use Mark Cuban's favorite trade, the collar.
Interesting. Yeah, collar is an interesting one. I'm kind of surprised, given the audience we speak to, given who tunes into our shows, who reads our site, who follows us on Twitter. I thought, maybe because we gave them so many other option-oriented choices that it kind of diffused the answers amongst that. But so far, actually, just moving to cash or bonds is winning with just a little bit over a third, 34%, which I thought our audience would just pshaw at that, because you're right. Who moves to cash? You're an options guy. We don't do underlying here. We don't do cash here. That kind of surprised me. But I think maybe because we gave them so many other options, pun intended, that it just overwhelmed their choices. Number 2 is your choice, Mr. Rock Lobster. Or not Rock. I would not. Actually, Rock Lobster isn't an insult. Greasy meatball, definitely an insult. But Rock Lobster, it's more in the medium slander category. But yeah, 26% for the collar or collar with a kicker. So getting some collar love out there. You're right. Some Mark Cuban fans out there, perhaps. Number 2, that was 26%. Number 2, the put spread or the ratio put spread. I wanted to give the listeners of this show some love. Put the ratio in there as well. So 21% for that. And number 4, very close on the heels there. Just the straight up old bland protective put. Number 4, almost did it again. Mr. Corner Office. So yeah, no love for the straight up protective put, which is kind of interesting. I guess it's just too boring. They prefer to go to cash. So yeah, surprising results here from our audience. You got about another day or so, I think, to vote in this one before it goes the way of the dodo. Maybe we'll extend it to Sunday so you get the whole full week in there. So if you haven't voted, head on over at Options, make your voice heard, give some love to the old put, or give some love to the collar. Whatever the heck you like. Just don't let move to cash win the poll. That does not speak to the core mission, the core mantra of what we do here. All right, moving on here. This one comes in from Ian Wagner. He says, I'm confused. Well, hopefully we can help you, Ian. He says, are there tradable RVX options? CBOE has a microsite, but he's not seeing them listed on any brokers. Thanks. RVX, the product that came out of the joint partnership with our friends, both of our friends on this program, Russell Investments, as well as good old CBOE. This is, of course, if you're not familiar with them, listeners, they are the Russell 2000 Volatility Index option. It's effectively the Russell VIX. That's what it is. We talked about it a lot, particularly when it launched a couple of years ago here on the show, and it was an interesting product to watch. We don't get to talk a lot of Russell Vol, and structurally, it should be very attractive, the volatility traders, just because from a structural perspective, small caps are inherently more volatile than large caps. So there you go. You want volatility, small caps is the place to be. But for a variety of reasons, many of them too boring to list here on this program, that kind of fall into the behind the scenes minutia that go on here in the space whenever you list a new product. They haven't really caught fire. There's been a lot of issues, I think, with market makers and listings and getting everyone behind them and understanding the product and awareness and a bunch of other stuff. And of course, there's been a lot of changes over there at Russell, the parent company as well, which has kind of left this product, I think, a little bit caught up in all that maelstrom over there. So it's been a variety of things. I know they would love to see this product catch on. I'm sure you guys would as well, Mr. Russell. Mr. Russell talking about Russell products. But it's an interesting one. It does trade. There are 4 contracts open right now. And the average volume is a surprising 31 contracts. That's a surprising amount. And the average open interest, 367 contracts. So it does trade. They do exist, but kind of hard to find. I don't know. Anything you want to add, Mr. Rhodes, for someone like Ian? They're interested in Russell Vol. They've been to the CBOE microsite, but they can't find it anywhere else. What should he do?
I'd like him to send me an email and tell me what broker it is. and then maybe I can help him with that. I'm really supposed to be agnostic as far as brokers go, but I think most of them are offering RVX options. As you mentioned, the volume and open interest is a little lighter than we would hope, but as you also mentioned, there is a deviation between and a relationship between RVX and VIX, and I'm surprised more people don't take advantage of that. We used to have VXN futures on the NASDAQ volatility, which have since been delisted, and I would have an awful lot of fun spread trading those versus VIX. I probably should start taking a look at the Russell futures versus the VIX futures and see if there's anything to do in that place. I had written a paper on NASDAQ volatility versus VIX. I haven't done that with RVX versus VIX. And that's going on the list right after discovering why people like round strike prices.
There you go. If you want to give them your email, feel free. I won't do that for you. I won't condemn you to that fate, so I'll make you do it yourself.
Oh, but it's just it's my last name at CBOE.com. It's not very hard to find.
There you go. Rhodes at CBOE.com, or of course, hit him up, follow him on Twitter. You can direct message him there. I think he follows us on Twitter as well. So I know he uses Twitter. I think this came through Twitter actually. So yeah, interesting stuff. Yeah, we all want to see more vol products take off just for our own sanity in the volatility space. It's a lot more fun to talk about a variety of products rather than just a handful. But that said, this one has some interesting prospects. And you're right, we have seen a few spikes in activity in RVX, usually tied to the divergence of volatility in the Russell and the S&P. When it gets fairly substantial, that's when we've seen paper moving into both sides, including the RVX. But outside of those moments, outside of those divergencies, we haven't really seen a lot of love for RVX. I'm like you, Ian. I'm still waiting for that moment, that switch to flip. Hit Russell up with your broker, or hit us up and we'll tell him maybe we can get your broker on board if you do want to trade those. Because you don't want to switch broker for a product, but maybe we can get that broker just to flip that switch, turn that underlying on for you. You should see them. They do exist. They don't trade much, but they're there. All right. Oh, this Russell. Next one is just like this is like candy for you. So this one comes from Eddie. This is kind of refers to what we were just talking about earlier. In fact, I think you were just tweeting out some charts to this very effect. He says, December for volatility. Is this month always the seasonal low for volatility for the year, or is that still reserved for July/August? Well, luckily for you, Eddie, we got Mr. Seasonal Volatility here on the program, the man who has all those charts and all that data. Mr. Rhodes, have at it, sir. I'll just mute my microphone I know you got about 20 minutes on this topic, so have at it, sir.
I don't know about 20 minutes, but I have done an awful lot of work in this space. And I did tweet out a table that I used in a webcast that I did about how VIX behaves in December. And believe it or not, when you rank average VIX by months going back to, and I go back to 2007 on this because I also do something with respect to backwardation. And I think that's the data that we need I think to use VIX futures contracts and have a lot of integrity around the data, I like to start with January 2007. December, on average, has had the third highest VIX rank. And there are a couple of things that contribute to that. We went over the fiscal cliff, which really back in 2011, 2012, something like that resulted in elevated volatility between Christmas and New Year's. Last year, VIX was kind of working its way up as we were concerned about 2016, which were warranted concerns until February 11th, and then we took off to the upside. But on average, the highest average VIX, I think everybody would guess October. The second highest is November, and then December. He also mentioned is August and July, the low months. August, we've had a couple of volatility events in the last few years, so August actually ranks kind of in the middle. And I think it's what happened with China in 2015. And then also we had an instance where U.S. debt got downgraded and something happened with the euro currency 2 or 3 years ago that resulted in high volatility in August. So I think I think you're correct. Without those two, August would probably be down at the low end, because July is at the low end, and these months tend to clump together, which has fascinated me forever. Is April. April is the lowest. It has the lowest average VIX, and I also have ranked months by days in backwardation, and I use an average of the 2-month VIX futures relative to spot VIX to determine that. April has the lowest average VIX, and it also has the percent fewest days in backwardation, which is often associated with a spike in volatility. I for the life of me, I cannot. The only thing that happens in April, there's three things that happens in April: my mom's birthday, my sister's birthday, and taxes. And I don't really think any of them are reasons that we have the lowest average VIX in April. Maybe it's just we hadn't had a surprise yet in April. So, December's not as quiet as one would expect. I probably, and here goes on man, I'm just making a great holiday list so I never get to the honeydew list around here. I probably should rank realized volatility by month. And I've got the data to do it with and see what comes from that. Because realized volatility, when I calculate that, it's non-directional. It doesn't care if we have upside volatility or downside volatility. So we've added, I've spoken for 50 minutes with you, and we've added, a couple of weeks worth of work onto my to-do list with that.
My job then is done, sir. I've done my duty. I can move on. But yeah, that is surprising. I was just mulling that. I was looking at that chart you tweeted out. By the way, if you follow us at Options, we retweeted Russell's chart. You could see it there. If not, just follow Russell. He's at Russell, 2 S's, 2 L's, and then Rhodes, not like the island, but RHOADS. And not like the road itself either, and then you could follow him and get all that goodness for yourself. It is kind of surprising, you're right, that April would take them out. The only thing I could think of, Mr. Rhodes, is that everyone is out there hither and yon, and that Schedule D for a lot of the trading audience is just so complicated. They got to get it all done, so they take a few days off trading to finish compiling all that, and that's why April is the lowest month. What do you think?
That really is the only thing that's going on that time of year that we might be able to contribute it to. I just think that also there's just that we haven't had a volatility event. I should take like the average in 2015 in August and throw it into April and see what happens ranking wise if something like that happens. Because I do think that it's just that they've dodged bullets every April so far.
Yeah, interesting stuff. I know we've joked in the past here on the show that it seemed like February was the month where the crazies came out in force in VIX. We used to profile a lot of really absurd trades, and for whatever reason in VIX, and for whatever reason, we'd see a lot of people coming in and buying the Feb 75 calls, and that stuff always seemed to line up in February. So maybe there are a few months that are surprisingly correlated with weirder stuff than we thought. April being a surprising low, and maybe February still being the craziest peak. I know this past year, February had a lot of weird stuff going up, so who knows? Maybe there you go, another paper for you, Mr. Rhodes. Compare the crazy peak of February versus the doldrum trough of April, and some correlation / analysis therein. There you go. Got like 7 papers for you now. It's easy. You're going to regret coming on the show by the time we're done, sir.
Never. It's the best part of my week.
You may regret it when we see the results of the crystal ball, though, because it's time for that segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, it is that time, and amazingly, the VIX Cash has pretty much remained unched throughout the entirety of this program. I thought for sure some crazy news would come in midway through and spike it a bit and give Mr. Rhodes at least a fighting chance at victory, but alas, it was not to be. I have once again claimed the title, claimed the throne here of victory in the old crystal ball. At this point, Mr. Rhodes, I'm even rooting for you. I want you to get a couple in there before the end of the year. Get a few victories on the old list. Your ghost has done all right. The actual Russell, perhaps not so much. But yes, I picked last week. I was on the 11.75, going out this week at the end of the show, 11.62. So 0.13 off. That's well within our margin of error. I'll take that as a pretty good victory for this week. So that means I get to go first, or I get to choose who gets to go first. I tend to like going first just because otherwise people come in and they jump all over my spots. And we all know when I pick first, it seems to work out pretty well. All right, so we got a holiday weekend ahead of us. We got more holidays looming on the horizon. We have not a heck of a lot else in terms of any real drivers of volatility that, as we discussed at the top of the show, anything structurally that we're looking at. Again, we are seeing a little bit of bid to the Jan futures, but we're not talking Jan for next week. We're not there yet. So we haven't hit that level where, of course, the inauguration and everything else starts coming into play. I'm kind of with you that there should be a floor, but it's probably somewhere around this level, maybe a little bit lower. I'm going to say this time next week, let's see. I'm going to say, I said I picked 11.75 for this week. I'm going to go 11.25. So a lot of half a point less or so next week, but then kind of bottoming out around there. So, Mr. Rhodes, I know that's deeply offensive to you as the degenerate vol buyer that you are. So have at it, sir. What do you say? 17, maybe 30? You love that 30 strike. What do you got?
Hold on. We've been guessing VIX.
Oh, that's the problem. Yeah, you've been guessing.
I thought we were guessing RVX.
There we go.
Gee
all
whiz.
this time, an
All right.
entire year.
Just so I win, I'm going 11.16.
Wow. Scamming me to the downside.
I'm going to go 12 because I actually think the futures have it right, and we're going to start to see a creep up in volatility. So, and that's really not a big stretch, and it also kind of goes along with that average VIX chart that I tweeted out earlier today. So I think I do believe that as the January 27th options continue to work their way in, that we are going to that we're going to start to see an increase in VIX and a higher floor for VIX.
Yeah, I think it's coming down the road too. Whether it happens this time next week is the mysterious question. And of course, he couldn't join us, but the ghost of the greasy meatball, he is here in spirit, if not the Christmas spirit. And but he's not feeling any vol next week either. He's feeling really, really just like he's thinking like historically low levels for S&P implied volatility. He's going to 5.2. He's going just deep floor. All the bottom falls out of all things of volatility. So we'll see who prevails next week. If it is me, if it is finally, I'm even pulling for you, Russell. I want you to get one in the bags too. If it is indeed soon to be Dr. VIX, or if it is indeed the ghost of the greasy meatball. I'll give you a hint. Not a good chance for that one, but we'll see. The ghosts have done well in the past. Unfortunately, that music means we have drawn to the close of yet another exciting episode of Volatility Views. And oh, what a journey it has been. Talking RVX, talking a seasonality of volatility, talking the VIX Futures, talking VIX weekly options and mothership options, the magnetism of the 30 strike. A bunch of interesting stuff on today's program. If you couldn't join us live, of course, find us over there, iTunes, Twitter, wherever, iTunes, TuneIn, wherever you find your stuff, our app, the mothership website, wherever you like to go. It's all available there every Monday morning, bright and early for you guys to enjoy. And before we go one last time, Mr. Rhodes, what is cooking in the land of all things CBOE and live vol?
I gotta figure out which among these things that you have given me to work on I'm going to work on. A couple things have been added to the live vol platform. You can actually go back to 2011 and look up old trades. They've added the link to which time and sales pops up for you. So you've got a lot more history that you can work with on the live vol platform. We had the program last week, and then I lobbed a call into those guys, and they said, look, Monday, there will be an update to the Live Ball Pro on Monday, and lo and behold, it showed up. So there have been some changes there. Finally, Wednesday, January 4th, I will do a 2016 review webcast at CBOE, and I'll probably sneak some things in there about what we might expect in 2017 as well.
I thought I noticed some differences on the platform. Again, I was traveling most of the week, so I haven't had a chance to check in with my my mothership Live Vol platform, but I loaded it up this morning in preparation for today's shows, and I thought I noticed a few new bells and whistles. I need to dive into these a little bit more and see, including this marquee tab, which is kind of interesting. So a lot of cool stuff. Check it out over there. Just search for livevol.com or, of course, the data shop if you are indeed so inclined. You want to get some bespoke data over there. And, of course, you couldn't join us, but head on over to optionpit.com. Check out all the weekly webinars and things they have over there. If you like all things vol, they have a lot of webinars on VIX and all this stuff we talk about here in a lot more detail. Optionpit.com. To learn more, and on behalf of Mr. Corner Office and the Greasy Meatball, I should say the ghost of the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, asking such great, many, and varied questions. Keep those coming. We love to hear from you guys. And we'll see you next week for more Volatility Views. Don't forget, Twifo Live in about 30 minutes here, 1:30 Central. So stay in the chat, stay around the chat if you're in there right now, and we'll see you again in about 30 minutes.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.